welcome to The Explainer. Today, we're going to unpack a pretty detailed market forecast from the YouTube channel Elcaro Trade. Now, this came out right after Bitcoin hit a brand new peak. And what's interesting here is that this isn't just about price targets. Nope, it's really a deep dive into a whole worldview that connects politics, macroeconomics, and, of course, the crypto market.
So right off the bat, the entire analysis is framed by this one powerful claim. The argument is that these wild swings we're all seeing in the market, they aren't some kind of accident. They're a feature, not a bug, a deliberate tool being used to wipe out the average investor through what the source calls huge manipulation.
And the trigger for this whole forecast, Bitcoin hitting this exact number, $72,000. The speaker claims they predicted this level down to the specific timing, which, gives their whole analysis an air of authority from the very beginning.
Okay, so to really get our heads around this wide-ranging forecast, we've broken it down into 5 key parts. We're going to start with that core idea about manipulation, then look at the big economic picture involving Trump and the dollar. After that, we'll check out a pretty contrarian call on gold, factor in Elon Musk's role in all this, and finally, we'll decode the crypto playbook. All right, let's dive in.
Okay, first up, the central idea. The source basically says that what looks like everyday market volatility is actually a calculated strategy. The goal isn't just a sudden crash, but more of a slow burn, designed to destroy wealth through pure uncertainty and manipulation.
So let's dig into the macroeconomic theory that the source uses as the foundation for all this. And, well, it starts with a very prominent political figure, former President Donald Trump.
The analysis really zooms in on Trump's stated desire for a weak U.S. dollar. The speaker actually calls this stance ridiculous and unbelievable, arguing that it's a direct path to just eating away at the purchasing power of everyday people by making everything we import way more expensive. Now, this is where it gets really interesting. This slide visualizes the huge dilemma that, according to this worldview, the Federal Reserve is caught in. They're basically forced into an impossible choice. Either protect the consumer by fighting inflation, which could totally stall the economy, or sacrifice the dollar to keep the whole financial system from collapsing. And the theory gets even more specific. The source lays out this supposed multi-step plan. First, Trump appoints a new Fed chair who is against printing money. Then, interest rates get hiked up again, and then the markets are intentionally crashed. So what's the alleged endgame here? A total market reset that would somehow let the U.S. pay off its entire national debt. So let's see how this whole economic theory leads to a very contrarian take on precious metals. I mean, while a lot of people are bullish on gold and silver right now, this forecast goes in the complete opposite direction.
The source pretty much calls out the popular idea that gold is headed for the moon. Instead of some massive rally, they're bracing for what they call a huge correction, and maybe even the biggest crash.
And they're not just being big about it. This chart shows just how specific the prediction is. The forecast is calling for a steep 20% drop in the price of gold from its recent highs.
And if you thought that was dramatic, the call for silver is even more so. The analysis projects a staggering 40% crash in value. That completely flies in the face of what a lot of precious metals bulls are expecting.
All right, moving on from traditional assets and politics, the analysis brings in a third major force that it believes is shaping the whole financial landscape, the wildcard influence of Elon Musk.
The source points to the merger between Musk's AI and space exploration companies as this huge pivotal event. This move creates a new corporate giant valued at an estimated $1.25 trillion. That's a massive new player on the world stage.
And according to the forecast, all this corporate maneuvering is going to accelerate Musk's personal wealth to a level we've never seen before, making him the world's first trillionaire. And they think it could happen as soon as this year or by the end of 2027 at the latest.
And that brings us to the real heart of this forecast, the crypto playbook. After setting this whole stage with macroeconomics and market manipulation, the source lays out a really detailed sequence of moves that they expect to see in the crypto space. So here are the numbers. The forecast is calling for some pretty significant short-term corrections. As you can see, Bitcoin is expected to drop into the $60,000 range. Ethereum could fall as low as $1,900, and Solana is targeted down near $87. But that midterm outlook for Bitcoin, that's even more severe, with a potential bottom all the way down near $40,000. So the crucial point here is that this isn't a prediction for a quick dip and then a fast recovery. No way. This timeline outlines a long, drawn-out crypto winter,
It suggests the market won't really find its bottom until a first low at the end of 2026, and then maybe a second low at the end of 2027. In this view, the next big bull run is still years away.
So based on this entire worldview, the speaker shares their personal strategy, and it is extremely cautious. As you can see from these steps, the plan is to take a little profit on short positions, but then just stop buying assets completely. The focus is 100% on trading to build up cash and then just waiting patiently for that predicted 2026-2027 bottom.
So, why does all this matter to you? Well, the core message from this forecast is really all about strategic patience. It argues that right now is not the time for aggressive buying, but for preserving your capital. The real, once-in-a-generation buying opportunity, according to this analysis, is only going to come after a major market reset 2 or 3 years from now.
Which leaves us with one final and pretty crucial question. This analysis presents a highly detailed, super confident vision of the future. But when we're faced with any forecast like this, how do we, as observers, as investors, tell the difference between a clear signal and what might just be very compelling but ultimately speculative noise?